The other thing is always make sure you've got income protected. You've heard us talk a lot in a lot of podcasts, income is key in retirement. When you work, you make money, that's your paycheck. When you quit work, the paycheck goes away. You have to have another means of a paycheck, and that's the income. And we do that. You all know that Social Security is good income, pensions, but you need to have other sources of income.
Achieving financial success takes dedication, discipline, and most importantly, a plan. For over 30 years, Don Reynolds has helped savers define their needs, formulate their plans, and achieve their goals. From accumulation to preservation and protection, and through the income distribution phase in retirement, implementing the right strategies makes all the difference. Your retirement is our business. Welcome to Strategic Asset Preservation.
Well, good afternoon, everybody, and welcome to another episode of Reynolds Wrap. I'm, of course, Don Reynolds, and missing today is my great friend and business partner, Corey Still. He actually has a family situation with medical stuff, not him personally, but in his close family. So Corey couldn't be in to join me today, but we're wishing him and his family all the best, and hopefully everything will work out just fine. So with that, we thought we'd talk about volatility, or I would today, because clearly there's quite a bit of it out there. I know this kind of scares people, I would guess. The first thing I always say when you're dealing with volatility is it's always been here, but we've probably gotten a little bit stagnant in it because we've been on an uprise for so many years now that I think people get complacent and think, well, it's just going to go up forever. Well, as we all know, what goes up must come down. That's the law of evolution. And so with that in mind, we always tell people that you need to make sure that you have a plan. And when we say that, a plan could be with many different things in life, but today we're talking about your money and having a plan for that. Number one, you should always make sure you keep enough liquidity with your money to make sure when things like this happen that, you're not using monies that are in the market that you have to use to pay your bills or to do this or do that. So, don't always put all your money away in the markets. Keep some in a safe place, especially nowadays, higher interest rates makes it a lot easier to do that. There's plenty of money market accounts that are still paying 4.5%, 5%. I know that. So, make sure you've got accessible cash, the spending money, as I call it, because you never know what's going to happen in life. And so we got to always be prepared for those emergency things when they do happen. Another thing that might be a good time right now is if you are investing in the markets and you have money on the side, I don't know if this is a great time to jump in or not. I don't have a crystal ball, but you could dollar cost averaging maybe right now. That might be a way to do some and a little by little, kind of see how things go. If you got a 401k, maybe now is to make time a good time to maybe make your donation into that right now. Depending on when you do it during the course of the month and how you're structured for that, or if you're doing an IRA or a Roth, might be a good time to dollar cost average in right now because things are down. Now, that doesn't mean they won't go down further, and hopefully you have monies where you can continue to do this. So I always say little by little, don't do it all at one time. And of course, the other thing, when things are like this, maybe you need to look at how your investments are structured. Maybe now is a good time to maybe look at rebalancing. A lot of the quote unquote experts say that, maybe energy stocks right now, healthcare, things like that. If you don't have those in your portfolio, maybe it's now a good time to maybe take some of the money off the table on maybe some of the tech things or other things that you've done well with and rebalance it in these types of things. So, I think the key is when you look at this is don't panic. I think that people get too emotional when it comes to investing. And that's not, and everybody, quote unquote, the experts all say you don't want to be emotional when it comes to investing. These are monies that you can afford to lose. And if you can't, then you shouldn't do it in the first place. And so, don't go off the rails and just start selling everything because you're scared it's all going to crash. You may end up hurting yourself in the long run on that. So again, when markets are down, might be value. Things are on sale. Good opportunity to buy. Again, rebalance, like I said. If you've been very conservative, maybe you should go a little bit more aggressive in things right now. But always have a preservation strategy. You know, a lot of people put, on the downside, depending on who you're using for your, if you got a Schwab or whatever it may be, you can put a stop loss on it, so you can't lose too much money if things get bad. You got a stop loss. It'll liquidate the account or that holding for you when it hits that point. So a lot of people can do that. I don't know if they do or not, but if you're not aware of that, you should call your broker who you're dealing with and let them know that that's something you might want to do. The other thing is always make sure you've got income protected. You've heard us talk a lot in a lot of podcasts, income is key in retirement. When you work, you make money, that's your paycheck. When you quit work, the paycheck goes away. You have to have another means of a paycheck, and that's the income. And we do that. You all know that. Social Security is good income, pensions, but you need to have other sources of income. So, with that, I guess the biggest thing that I can say is if you are concerned, give us a call. We'd be happy to share our thoughts with you. Again, we don't have a crystal ball, but, we do things maybe a little bit differently than a lot of other advisors. And we've talked about that in the past. And again, I don't believe anybody can time the market. So don't try to do that. Don't think, well, get out now, then I'm gonna jump back in a week when it's down and it'll go back up, because it might go down some more. So you can't look at that. Remember, investing is long-term here, folks. That's the whole idea. And again, if you don't have the money, then don't take the risk. Okay. So with that, I would recommend you give us a call, and we're happy to share our thoughts and insights at 651-773-3859. Again, that's 651-773-3859. And with that, I hope you're all having a great day. You take good care, and we'll see you all next time. Thanks now. Bye-bye.
Listen to more with Don Reynolds and Corey Stilp on the Strategic Asset Preservation Podcast by visiting 800preserve.com.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.